Hello everyone and welcome to today's session. I'm Samiksha Lohia, Marketing Manager at R N Marwah Company LLP. Before we go further, I would request all of you to actively participate during the webinar. Right now, everybody is on mute to avoid the background noises. If you have any questions for any of the panelists, you can drop your question in the question section and all the questions would be answered at the end of the webinar. We'll also have 4 poll questions during the webinar and each poll would be open for 30 seconds. I would request you to share your answers within the time. Now, I would request our senior partner, CA R N Marwah, for a welcome note. Thank you.
I extend a warm welcome to this panel on the budget expectations to boost India's growth story in a post-COVID-19 world. Organized by R N M. R N M is a CA firm operating in Delhi for almost 75 years and spanning 3 generations. And with the initiative and leadership of Raghu Marwah, we are now having branches in Gurgaon, Bangalore, and soon to be in London. For a big year after the pandemic, people undoubtedly look up to the Modi government for various incentives, tax cuts, subsidies, and easier credit access. This discussion is meant to address the hopes from the upcoming union budget, particularly with respect to UK-India business, the technology startups in India, and the banking sector. Before we begin the webinar, I would like to introduce and convey my gratitude to all the panelists who have joined us from various parts of the world to share their experience and expertise. At the outside, I welcome Hilesh, who is a private client partner at an international law firm based in London. He advises on a range of private wealth matters to assist clients protect their legacies, has extensive interaction with international families, entrepreneurs, beneficiaries, and provides advice on personal taxation, complex succession planning, and trust law matters. Welcome, Hilesh. I also welcome now Mohan, who specializes in banking, direct and indirect taxation. He has been co-opted as a member of IFA, Hyderabad chapter, and specializes in cyber laws and forensic sciences. He has conducted various financial forensic audits on behalf of the PSU banks and financial institutes. He is also a GGI associate in Hyderabad. Welcome, Mohan. Welcome, Jay, who is associate at London. He has been extensively associated with the Indian community in setting up and managing businesses in the UK. He also has a wealth of experience in business advisory, personal tax, accountancy, and secretarial matters in UK. Welcome, Mr. Peer, who has more than 40 years of diversified experience in the financial sector and is presently heading the consulting division of R N M. R N M Consulting is a firm providing virtual CFO, payroll management, and ESOP services to clients across industry verticals and size. Mr. Peer is well versed in planning, organizing, and control of entire finance and accounting functions for small and medium enterprises and providing them with effective CFO services. Welcome to Prakash, who is currently heading the tax division at R N M Bangalore and has 15 years of experience in the field of corporate and international taxation, including GST laws. He advises domestic and multinational companies on various tax matters, including tax structuring and compliance aspects. Last but not the least, I would like to introduce our host, Raghu Marwah, Raghu is the managing partner of R N Marwah Company LLP and leading the firm. His expertise is on advising and structuring businesses overseas on behalf of Indian corporate clients, formulating an entry strategy for foreign clients to set up businesses in India. Transfer pricing and overseas taxation matters are part of his repertoire. He specializes in advising and rendering consultancy services to clients in relation to structuring strategic investments. I would like to hand over to Raghu Marwah to moderate the ensuing session. I'm confident that you will find the panel discussions enlightening and thought-provoking. Thank you all for being part of this discussion, and we look forward to active participation. I would like to ask Raghu to please take over and moderate the session. Thank you all. Thank you very much.
Thank you, Mr. R N Marwah, for your kind words and the introduction to our esteemed panel. With that, I will take forward our topic for today, which is budget expectations to boost India's growth story in a post-COVID world. COVID, as everybody is aware, has resulted in various changes, some good, some not so good, in our lifestyles and our ways of doing work. Work from home, or WFH, has become the most popular hashtag or acronym on Twitter. And I think most of us are aware of what work from home now means. Some of the other changes which are, I think, the theme for 2021 would be maybe the reversal of a globalized supply chain, thanks to lower dependence on suppliers in different countries, more localized supply or national in-house supply, or India's version of Atma-Nirbhar India is, I think, a theme which one would see going forward in a post-COVID world. Greater e-commerce use is something also that we have seen in a post-COVID world, which would get accelerated over time. Reduced travel, and on a personal level, I think each of us have seen a focus on healthier living. I think with the time that one has in the house and the focus on some of the climate change issues, which are, some would say, emanating or leading to the COVID pandemic, overpopulated world, I think leads us to pause and think about some of the changes that one would like to make going forward. So with that, we would like to ask our first poll question, which will be appearing on your screen shortly. The poll question that we are asking is, around the world, people yearn for significant change rather than a return to a pre-COVID normal. Would you agree or not agree with that poll? This is an audience poll, so we invite all of you to participate, and whether you think it's correct or not, submit your poll answer and we will share the results of that shortly. So the question obviously is that what government, and in this case the union government through their budget, can do to help support businesses, support individuals who have been adversely impacted by COVID, to help them get back on their feet? Or are the government, obviously going to be concerned about their loss of revenue, how they can make good their GST collections, which have, fallen off, or other ways in which they can focus on reducing their deficit? So obviously it's going to be a tough balancing act for government to focus on, increasing consumer demand, as well as their focus on the deficit. The poll result has come, and I think 97% have shared that people do not want to go to a pre-COVID normal. Some of these structural changes that we are seeing in terms of work from home, e-commerce, reversal of global supply chain are things reduce travel? Are things to remain? So that obviously impacts business going forward, and how businesses can be nimble and tweak their business plans to cater to these changes, and how governments can also help support these new opportunities wherever there are, is some things that we're going to be talking about today. With that, I think let's talk about our first topic, which is the UK-India business potential and hopes from the budget. Why we selected this topic is obviously because UK has been a traditional strong partner. We look forward to entering into a free trade agreement with UK to enhance the trade ties. UK trade dipped from $15.5 billion in 1920 to from $16.9 billion in 1819 to $15.5 billion in 1920. So, and with the Brexit in the UK, there is a potential to focus on new areas such as Indian aerospace, higher education, green economy like municipal waste, and also maybe look at large British manufacturing companies such as GSK Pharma, Unilever, who have been in India for many years, and how they can potentially get a fillip in their India business. We all are aware that last year there was an incentive of 15% tax rate that was given to new manufacturing, and whether they extend that in this budget to also the existing manufacturing companies like GSK and Unilever is something that I think everybody is waiting with bated breath. But with that, I think I'm going to ask my first question to Hilesh, which is, Hilesh, do you think with the pandemic and greater global transparency, Indian ultra high net worth individuals would reduce their purchase of UK vacation homes and of setting up trust funds for their families in UK crown dependencies such as Jersey and Isle of Man? What are your expectations from the upcoming budget? Over to you, Hilesh.
Yes, thank you, Raghu. I think you're very much right in that this period of the pandemic has changed the way a lot of us live, work, do business. I think it's really provided a catalyst for changes that people would have made. It's not anything perhaps new. I think it's just brought forward by a few months, by a few years, what people were always looking to do. So what I have been seeing in this past year is people who want to come to the UK particularly, but other places perhaps, is they really want to look to move for them and their family to make, whether it's lifestyle changes, for the UK education, the healthcare system, whatever that may be, or actually diversify their businesses and where they're investing. I'm seeing particularly a lot of people looking to London and it being a hub for to further grow their tech businesses, perhaps that they've been already developing in India. But I think they will continue to do this, and I think this will really gain a lot of speed, and I think we will continue to see that investment come out. Those people from India who are always going to leave or do more outside and have another income base, as it were, to in some ways get around the capital controls that there are in India. And you talked about the transparency point. I think we're a few years in now, and most people understand that this is the new world we live in. There is really nowhere to hide. If you do go off to jurisdictions in far-flung places, you're going to find it difficult to bank, attract investors, do anything really. So going places like the Crown dependencies, like the Channel Islands, that is, I think actually they've done very well. They've been ahead of the curve, and I think we're going to see much more there. And also the UK is sort of seen a bit of a mid-shore. It's still very low tax jurisdiction, and it's the basis of taxation, particularly for individuals with our remittance basis, is very advantageous. So I think we will continue to see that. That's all presupposing we don't, in our sort of post-Brexit, post-pandemic world, become very protectionist. But I don't see that, I hope, and I don't see that happening in the UK, because we need our trade partners outside of the EU, because the EU are making our lives very difficult. So we will and will want to look to India to really tie up those relationships.
Super. Thank you so much, Hilesh. I think that is very informative. So from your point of view, you don't see Indians not doing business with UK. You see that going forward in spite of the transparency. I think that's the new world order that we are in. Yeah. And I think that's a given. And yes, any particular hopes or expectations from the budget from the UK point of view from your clients? Are they any specific points that you're maybe hoping that the government will address?
So there were the changes that came in the last budget in terms of the number of days that wealthy NRIs could spend in the UK, you know, where their Indian income is above 15 lakh. And this is quite frustrating in two ways, because often you have those Indians who are coming to the UK, spending some time there. I think this provision really stops them from having their base and really, you know, doing what they want in India. And I think it's to India's detriment, because they're trying to keep their income below a certain level. But equally, I think it also stops those people who might want to then, who are in the UK, want to do more things in India, to then not be caught in the Indian tax net again. So it's in both ways, actually. I think it stops people from investing in the UK, because they think, well, I've got my income above 15 lakh, and I'm going to be taxed in India. I then don't want to leave and then be taxed in the UK and go through that. But then it's for those people, so the people aren't investing in the UK, but equally, people then in the UK are trying to then move everything out of India. So it's really a double-edged sword there. And so I think it would be good if we got rid of that whole mechanism. I think that's a pretty frustrating one. I think another one, and there has been talk about improving the banking system. I think that's a classic bugbear. I think it will make it easier for people to invest outside of India, but also it will make it easier for those businesses and those people wanting to invest, back into India and do business there. And more radically, it would be great if we didn't have capital controls in India. I think it would actually be a boon to India, perhaps counterintuitively, because people will think, actually, yes, I'm going to do business in India, and I'm not then going to get my money stuck in there. So they'll be much more willing to invest.
Yes, I think, Hilesh, both points are very valid, and I think it goes around the theme of what we as professionals have been wanting to see, and maybe to an extent the government has been trying their bit. Let's be fair to them. Ease of doing business is something which really is catching the attention of a lot of Indian bureaucrats as well as leaders. And yes, both the points that you mentioned about the tax residency, as well as the protocol under FEMA for sending money out and getting money in, both of them need some tinkering to relax and bring a little more ease of doing business to the businessman. With that, I'm going to switch gears and move to Jay Haran. Jay, the question that I have for you is, do you think with greater focus on digital processes, more high-cost work, including financial compliances in the UK, could be offshored to India in a post-COVID world? What are your hopes from the budget to increase FDI inwards from India into UK? Since you obviously are seeing a lot of Indian SME businesses who are aspiring to be global and are finding UK as the first port of call, what are your expectations to kind of really increase the floodgates of that business cross-border movement into UK? And whilst you answer that, we are also going to just put out a poll question on cross-border business opportunities for the audience to answer. Go ahead, Jayaharan, this is for you.
Thanks, Raghu. I think I would like to start with your first question, which is about the cost implication for businesses in UK and the opportunities for outsourcing. I think you have touched upon a right topic there. Given the post-COVID scenario, most of the people from may it be banks, may it be IT companies, market research companies, are working from home. And I think these people are being still paid on the basis that, you're working, as if you're working from, in the office. So I think there's a great opportunity for these businesses now to, does it matter whether people are working from home or people are working from India or other parts of the world? No, but if they can reduce the cost, if the businesses can reduce the cost wherever possible, I think there are a lot of opportunities for outsourcing businesses. And India has been a hub where there are already a lot of outsourcing companies, and they are doing really good. Skill set in India is really good across different industries. So I think there will be a lot of opportunities there, and may it be digital media, may it be entertainment, may it be market research. IT is of course already quite on top at the moment. Apart from that, we have seen of late a lot of small accountancy practices. They have also started outsourcing to India, and a lot of Indian companies have started setting up base here so that they have some representative office in UK to represent their outsourcing business. So that is, I think, quite a norm. And I think going forward, because of COVID, we will see quite a lot of growth in that area, particularly with the drive to reduce cost in the business, because revenue has definitely taken a hit for these businesses. And I think the next possible move is to reduce cost and still keep the talent. Now coming to the FDI investment, I think we have of late seen noticeable growth in foreign direct investment in India between both the countries. India is now second largest investor in UK as per 2019 data available, and Department of International Trade is also kind of constantly looking into it. There are a lot of Indian companies currently trying to set up business in UK. Different sectors really, as Hilesh also mentioned, because of remittance rules, because of ease of doing business with UK, there are a lot of business who are trying to set up business in India. As of 2019 data, there are around 842 companies, large companies, Indian-based companies, who have done more than 50 crores of business per annum. These companies are doing good. Set up or created 110,000 jobs in UK. They are giving a revenue of around 41 billion pounds worth of contributing to UK economy, with around say 462 million pound of tax in UK. I think this is only for the large companies, but there are a lot of small companies who are a lot of small companies which are like subsidies, or maybe even individuals who are trying to invest in UK under LRS scheme or liberalized remittance scheme, as per which I understand you can invest up to 250,000 USD per annum per person. I hope that the forthcoming budget increases this limit to accommodate more investment, and to encourage trade between and investment between both the countries. Now coming to the trade, UK government has reduced duties in the post-Brexit scenario. So one of the classic example is the basmati rice import from India to UK. Before Brexit, it was 175 euros per ton, which is equivalent of around 155 GBP per ton. Now it is 121 after Brexit, it is 121 GBP per ton. Likewise, UK Prime Minister Boris Johnson has been, insisting for decreasing the duty on Scotch whiskey, which is currently 150%. So I see, and I hope that the budget forthcoming budget addresses these kind of things, reduces the duties to encourage, to encourage trade between both the countries. We keep hearing that there is about 100 billion GBP worth of trade deal between both the countries on the card, which is approximately 10 lakh crores in terms of Indian rupees. And I think there's a real great opportunity here for Indo-UK trade. And Raghu, as you rightly pointed out, I think both the countries should try and pave way for free trade agreement and try to encourage a lot of investment and trade between both the countries. Thank you, Raghu.
No, wonderful. I think your point is very well taken that the LRS limit of 250K, we should increase. Our RBI foreign exchange reserves have been growing, and I think as a country we have adequate foreign exchange to be able to afford to increase that LRS limit. So I think that is a very valid point, a good suggestion. So we have also the result of the poll question regarding cross-border business and opportunity, and I think majority of the people here are talking about both FDI and tax relaxations that they look forward to in this budget. So I think overall, I would like to say that UK and India have a great future. I think it's a question of the reverse Raj, so to speak, which is at play. There is a great appreciation for the English common law and the business-friendly kind of environment. And Indians are quite comfortable in that jurisdiction, I should say. It's now just a question of trying to enhance and see what niche we can find to kind of grow that startup field. And Indian tech startup field, as we are all aware, is something that has been growing right through the pandemic. So we've got unicorns like Paytm, Ola, Big Basket, Byju's, which have become household names and have grown into very large corporates, hiring thousands and thousands of people. And, till 5-10 years back, they were unknown, in the Indian landscape. So that's the power of tech startups right there, with the transformational change that they can bring about in a short time period. But at the same time, I think there are miles to go in terms of, some have been talking about a new super app that they are looking forward to, similar to what you have in China, which is WeChat, where you can do from social media to fintech to e-commerce, everything on a single platform. I think there are talks about maybe JioMart and WhatsApp combining to try and create that super app in India. So I think the jury is going to be out there to see if that really happens, whether we do successfully create a single app or a platform to do everything, rather than having specialist different apps. And I do tend to think that in an Indian democratic environment, there is far too much happening for that kind of homogeneous cohesion like you do have in China, due to which you have behemoths like WeChat over there becoming so big. But moving on, I think with some data, there are approximately 42,000 startups which are recognized by the DPIIT, which is the government authority which certifies startups in India. And that number has been growing, but we also have all seen a fair bit of change in terms of angel tax, which is the section 5627B, which has been tinkered with even last budget, but it remains to have some niggling issues. There are challenges in how to enhance the efficacy of section 80 IAC, which is the tax holiday for startups. There are very few or low number of startups which have actually been able to avail the benefits of 80 IAC. So I think, again, some ease of doing business is required over there to enhance its efficacy. There are data and privacy issues which remain stumbling blocks for growth of the tech startup landscape. Data, I think there's enough been said, being the new oil. And I think one of the incentives of funding that everybody's looking forward to is in the research and commercial data center setups in India. So we obviously need to set up huge number of data centers to make India a hub for artificial intelligence as well as tech startups. So that is something which I think requires some governmental push to help retain some of that data in India. And there are already privacy laws which are in the annual, I've been told, at various draft stage to kind of protect and lay down the do's and don'ts around the privacy for these large tech startups which are there. And I think the other aspect, coming back to ease of doing business for tech startups, is, there was the Vivad se Vishwas scheme, which was a very successful scheme of the government. And there are talks about why don't you just make that a continuous framework for resolution of the direct tax cases to reduce litigations going forward. Why have a close-ended VSV scheme? Just keep it open-ended and let people go in for a resolution and reduce litigation for startups. But with that, I'm going to firstly go to Prakash. And Prakash, from your standpoint, sitting in Bangalore, which is obviously the global hub for tech startups, and India is kind of become iconic for that. What do you see in terms of with the economy gradually reviving from COVID-19 slump? What are the benefits that Indian tech startups expect from the Union Budget 2021? What are the, we're now not only talking about the large behemoth tech startups, but also the early stage tech startups. What are the kind of expectations that they have from the Union Budget of 2021? Over to you, Prakash.
Thanks, Raghu. While the exemption to startups from angel tax is a positive move in the last budget, but there are certain restrictions and thresholds which still are there. Like the startups cannot invest further cannot invest in the shares and the companies of the other startups. That threshold needs to be removed. That is one of the main thing which needs to be taken care by this budget, because that will help in the acquisitions, that will help in setting up the subsidiaries, that will help in generating more businesses in India, and that will also help in doing the ease of business. Because in the last 6 years, India has become a hub. It has come to 43rd place earlier compared to 142nd place in ease of doing business. But this ease of doing business should also come with ease of compliances, because if the compliances are stretched out, then the startups will not get a fair bit of things in India. This is one of the things. Apart from that, India is the third largest country to give help to startup nations. So like we have vast talent in India. So to develop this talent in India, we need to give more liberalization to the startups.
Right, right.
Then maybe we need to look into the exemptions, where we are giving 3-year exemption for the startups under 80 ISC. That might be increased to 5 years, because generally due to this pandemic, there is a cash flow issue. We don't have the cash flows in the hands of the startups. Maybe if we can extend the tax period holiday, or if we can extend the tax ops from 3 years to 5 years, that will be a positive move for the startups from the income tax perspective.
Right. So all valid points. I think what I mean, some of the things when we go to startups, especially Prakash, is not only the tax help, they also need funding. So there is obviously a big outcry for a sovereign wealth fund to be created to help get funding, because not all the angel funds, I mean there are a lot of angel funds in India. Indian Angel Network is there, and other networks which are doing very good work to kind of bring up the startups to a certain basic threshold in terms of pre-Series A. But do you think that there are, especially in the Bangalore market, some challenges around the service sector in terms of maybe some of the labor law issues, the hiring and firing issues that also need to be addressed? What are your thoughts on some of the scale up versus downscale issues, in places like Bangalore?
See, Bangalore is a hub where we get a lot of investor and we can discover talent. But there are some hindrances generally because, as I told, one of the things is we are not allowing the startups to invest in other company. So that needs to be liberalized. If that is being liberalized, we can have more opportunities in Bangalore where we can come up with large number of unicorns. Like now we have only Paytm or Ola. Then other, like in educational sectors also, we can develop these unicorns. Like now, there are a lot of industries, online education have started due to this pandemic. So if we can just generate more online educations, we can set up those startups. If the startup which is already has gone a major status in India, they can just give push-ups to the other startups.
That's right. That's right. It's a whole ecosystem of startups. I think that, where Bangalore scores, and that's what needs a little push. The whole ecosystem needs a push. So with that, I'm going to shift gears to Mr. TK Peer. From a CFO's perspective, for a tech startup CFO's perspective, obviously there are green startups, including electronic vehicles, which are very popular these days, and many people say that's the future, with the way in which companies like Tesla in the USA have managed to scale up. Tesla has recently just announced their Bangalore subsidiary, the India subsidiary in Bangalore. So there is obviously a lot of interest in electronic vehicles and SaaS startups, SaaS as in software as a service startups. And from a CFO's perspective, Mr. Peer, what steps would you advocate the government can take to make their journey easier, and what changes would you like to see in the budget?
Like most important is the first and foremost thing is the ease of doing business, as Prakash has also touched upon this subject. All startups, whether they are tech startups or other startups, for them they have to deal with the plethora of taxes like GST, then the PF, ESI, and other dues. They find it very difficult. We have to have some kind of a system where the compliances are made simpler for the early stage, the startups, at least till they attain a particular level. Then there are funding issues. Like government has announced a fund for these people, but on the ground, the fund doesn't reach the people because they can't get collateral-free loans. And whatever funding happens at a very high rate of interest, 14, 15%, 13%, which obviously these people cannot pay. Then there are other issues like what Prakash has already touched, like ATIAC tax holiday, which was applicable from those tech startups registered between March 16 and April 21. It needs to be extended. Then as you also touched upon that subject of this angel taxes 56.2, that right now that these proposals have to be vetted by an ministerial board and all that. We have to do away with these kind of things that really stagnate the process. Now coming to this, again, see, COVID has changed the world for good. Now people are doing work from home. It has become a way of life, and traveling has reduced. Now even the classroom for the children has come to their homes. So there are so many edtech companies, like you said, Baiju, which has recently acquired another, that Akash and all. They have now become unicorns. In fact, India saw 34 unicorns in last year, 1920. India saw the maximum number of startups turning into unicorns. And these startups are the way to go forward for any company like India. And tech startups, other startups, and see another thing. What is happening in India is that now we are looking to green, what you call freight corridors, green, what you call storages and all that. So that will open up more avenues for this kind of employment, even in villages, even in these small towns. People need not migrate to the cities, but we need to provide that infrastructure support. One is the fiscal and monetary measures that they are needed to support these people. The other is you need to provide them other infrastructure, internet, banking facilities, some kind of mentoring there. See, again, we are talking, India is again emerging as a hub of this solar energy. I think India is the country which generates maximum amount of solar energy in the world, because luckily God has given us sunlight, a lot of it which we can convert into energy and all that. So we have seen a number of enterprises now coming up with these small scooters. Like Tesla is a big bang company, okay, it's coming up more with electrical vehicles and all. And obviously after under 10 years, 15 years, the what you call petrol vehicles or diesel vehicles may be a thing of the past. So the government should come up with some kind of a green tax on those vehicles so that there's a disincentive for those kind of production. Well, on the other hand, incentive should be there for these energy efficient vehicles like some scooters and all have recently come up. So it has to be a mixture of all the measures, fiscal, non-fiscal, monetary, and all, keeping environment in view, keeping the Indian condition in view, keeping the Make in India in view. That Make in India, as COVID has changed the world, as you have rightly put it, now then you cannot depend on other companies for your supplies at all. You have to produce locally. You have to encourage your talent, encourage your other tech companies. And like Mr. Jayaharan said, that you can now do the what you call outsourcing services from this place can be rendered to the whole world, because now we have that high-speed internet. Everything is there. So India can be developed. We can really develop into a 10 trillion economy if we do all these things. So there are a number of things that can be done in this startups. So it has to be a composite all-round package. Lots of expectations are there. But at the same time, we have to understand the government has so many limitations. The fiscal deficit cannot exceed 4 or 5%. Beyond that, then there'll be inflationary pressures on the economy, and that will be counterproductive. So I do admit and I do add that the finance FM has to do a lot of balancing here and there. But anyway, these are the expectations, and this is people what expect. That's it.
Thank you so much for that, Mr. Peer. I think with that, we can take another poll question, which should be appearing on your screen, which is COVID-19 has had an impact on Indian startups who may have shuttered their business. What kind of relief would you like them to have? Would you like them to have some budget allocation specifically for the startup segment? So that poll question is on your screen right now. In the meantime, we can go back to Prakash and just touch upon the international tax issues regarding startups. I think there's a fair bit of transfer pricing concern that also comes up with startups who may be catering to their own subsidiaries in foreign countries, whether it's the US market or the UK market that they serve. They generally set up their own subsidiaries there, and then there is transfer pricing to deal with by such tech startups. Are there any challenges that you see in startups complying with the transfer pricing laws? Any peculiar challenges that you feel that the government can ease out when you come to transfer pricing for the tech startup world?
For the tech startups, generally from the transfer pricing perspective, we should try to minimize the compliances, because if you don't minimize the compliances, you're not going to get business. People will not set up the subsidiaries or will not do the acquisitions. We need to just ease of doing business will not help, but we need to do the ease of compliances also. Maybe the documentation, questioning of anything like the royalty or other international transactions. When that has been questioned by the tax authorities, it becomes a hurdle for the tech startups, because they might be earning some intellectual property in India. But if they are saying that this is not at a arm's length price, these are the issues, general issues which we face, because they might be giving some royalty, they might be giving some intellectual property, so that property is not registered in India. So we have to give some relaxations on this in the budget. That is one of the things.
Yes, I agree. I think what I was alluding to, Prakash, is that potentially a lot of investor groups, especially foreign investor groups, force Indian tech startups to have their IP located outside India, maybe in jurisdictions in Singapore or other jurisdictions. And then once the IP gets located outside India, the royalty and the FTS issues come up, which may lead to potential litigation and challenges on transfer pricing. And that's what you're mentioning, that it's not only the ease of doing business, but ease of compliance, which is required. Absolutely right. So with that, we also have the result of the poll, So 55% of you do agree that there should be a specific relief package for startups in the budget. With that, we're going to shift gears into our next question, next topic rather, which is the banking sector, which is Mohan sir's area of forte. The Indian banking sector, as you all would be aware, consists of 12 PSU banks, 22 private banks, and 46 foreign banks. Other than a plethora of rural and cooperative banks and shadow banks, such as NBFCs as they are called in India. These banking sector have total assets, as per government disclosed numbers, aggregating 2.5 trillion US dollars as on financial year 2020. The fintech sector is also growing very rapidly. So that's a fairly sizable banking sector that you have in India. But the issues remain on governance of banks, on easy credit, which should be made available for areas like healthcare, infrastructure construction, and affordable housing sector, which are obviously going to be in a huge focus post the pandemic. And whether things that are being talked about, such as PSU bank privatization and creation of bad banks, is the answer. So with that, I'm going to hand over to Mohan sir. What do you feel, is the expectation on from the budget on the banking front? Are things that I talked about, PSU bank privatization, creation of bad banks? What is the resolution for NPAs and moratoriums on loans? Are we just kick the can down and not trying to address those issues? What is your expectation? There's obviously a very, very large toxic element of borrowers which is sitting on the bank books these days. What is your viewpoint, Mohan sir?
Thank you, Mr. Raghu. Yes, now this is the hour of need of having bad bank. That's because NPA is almost 15.5% of the loan size, which has to be resolved, and liquidity has to come to bank, and government has promised around 1 lakh further 1 lakh crores fresh equity. So whether to privatize or now consolidation has taken up with almost major banks. Now it's 5, though PSUs we say now major 5 PSUs which are going to control. So one is hour of need is the bad bank with quick resolution and a separate judiciary for that. So at least resolution should be within 6 months. Previously they tried that ARC only against SR. Bad debts are purchased, but realization was taking long time. Now, that is our second. Unless government takes proactive steps for bringing infra funding as a separate institution, that what we call 2 trillion to 5 trillion transmission cannot happen. As Mr. Prakash said, that ease of compliances and encouragement for SME and startups, that should be the need of the economy, so that we can see that 5 trillion economy and Atmanirbhar Bharat funding, which government is contemplating of 20 lakh crores. So that has to be made available at macro level, and at micro level, yes, housing is the most hour of the need, which that what we call priority sector lending and health and insurance, because only 5% of the population is covered under insurance. This is a lot of gap, because COVID has given a big lesson for, though human damage or loss of life is less, but we should be geared up for this. Though pandemic has given a worse lesson, work from home is going to be the next culture, or is it again a temporary one, or is it having an effect on our infrastructure? This has to be checked up. But as a banking, where government routes their funding through banking, so hence the bankings have to be consolidated. Bad debts or NPA has to be immediately cleaned up. Third, a proactive funding should be there, either for both to startups and SME and for infrastructure, especially seaports, airports, and roads. That is the most important, plus cold storage and ordinary warehouses. This is going to be the hour of need. Someone has already said, now we have high bandwidth networks, so that where with 5G connectivity, so like even education is happening from work from home. So that even higher information pass on will be there with these infrastructures. This is what I feel government should do. And second is, our lending pattern has to change from collateral based system to credit rating system, so that both data is available transparently for banks, private sector banks, even in fintechs, which are going to have a major role now. This is what my thinks. And FDI is again one more issue, which unless we have compliances, ease of doing business. Previously, it was seen FDI as like when availability of skilled labor, ease of doing, and size of the domestic market. Now the new two angles have been joined. One, whether public health and infrastructure is available. Second is multilateral funding through special purpose vehicles have been allowed. Like how he said, right, IP registered in some other country, can we use freely in this country without taxation? This is what the government has to take, so that banking will be playing a major proactive role for growth of India.
Thank you, Mohan sir. Thank you for your comments. Just one last point on the banking before we let you go is on governance. Yes, there were lots of expectations from the government that you had mentioned that can be taken to enhance the banking and the availability of credit. But from a governance point of view, you know, you have also forensic experience. So I'm sure you've had very interesting personal kind of case laws that you have come across of governance challenges that you have identified. But without going into specifics, I just want to understand, what do you think is the solution to enhance governance? Is just putting it into private sector and offloading from a governmental PSU into private sector going to be the answer? Are we going to merely by privatizing banks enhance the governance quality in our country? What do you think is the answer to governance?
Yeah, I have mixed answer or mixed response for this. Purely, totally privatization should not be the solution, because from 1980 to today, this nationalization has really helped rural India, rural Bharat to grow. Only the political interference should be minimized, so that banking officials should have freedom to take their own decisions. Because most of these executives on the top level, they fear CVC or CBI inquiries post, because if some advance becomes bad, their career will get into stake. This is what is fearing them to take a free and fair credit decisions. But now, of course, I am not advocating this government or any supporting, but in this government, what I have seen in close corners, that political interference or top bureaucracy interference has been minimized. So that, especially that BBB, Banking Bureau Board. So just they are nominating and leaving, and decision is taken professionally by board. So, but again, private sector also is contributing. So both should go hand in hand. This is my opinion.
Thank you so much for that. So definitely you've hit the nail on the head. There are positives of the PSU in terms of the access that it increases to the rural areas. That's a big thing that one needs to retain. With that, I am going to firstly ask our last poll question, which is government expenditure. Should it prioritize which area? And I think everybody may have personal views on this, whether infrastructure, healthcare, sustainability in terms of climate change, employment generation, because obviously the government's got so many kind of but we have to choose, pick and choose. So if you were to pick and choose, which one area do you feel is the most important? I know my answer. I'm going to click on the poll question, and I invite all of you also to click on the poll question. With that, I'm going to open the floor to questions. We have 2 questions already here, which we're going to take on. I think the first question is from Mr. Jamie Winterburn, and I'm going to just raise that question. What is the general view of high net worth and ultra high net worth individuals, businesses of doing business with crown dependencies? Is there any specific or preferred structuring which would assist the crown dependencies with servicing their existing and or new Indian clients? So I'm going to direct this question to you, Hilesh, and then maybe Jay, you could add to that if you feel. Before that, I'm just going to close the poll results. So infrastructure and healthcare is unanimously equal as per the poll results of all of you. And over to you, Hilesh, on the question on crown dependency structuring and servicing for existing or new Indian clients.
Yeah, I think the first part of the question, the attitude towards the crown dependencies, I think Indian families, high net worth, ultra high net worths, are seeing increasingly the importance of structuring and these offshore tax neutral jurisdictions. It's still relatively new to the Indian market, I would say. But I would say particularly in the last 5 years, I think that is very much gathering pace, particularly with the sort of second generation who are younger, have perhaps been educated in the UK or America or elsewhere, and really seeing the value of having proper governance structures and somewhat separating sort of the business wealth and the family wealth, which is, you know, quite intertwined, and it will continue to be in some respects, but I think they are seeing the real value that particularly places like the Channel Islands can provide in its experience and legal jurisdiction and structure that can provide. In terms of structures, I think there's a particular issue with residents who are not ordinarily resident. So this is where people can spend a bit more time in India, NRIs, but not be classed as resident, as it were. There's a little bit of a let out there. And that generally works fine from a tax perspective, generally. But where you have a structure that the individuals are controlling or have quite a lot of active role in, you can subject sort of underlying trust assets, businesses, to Indian tax and bring it within the net, and also expose it to exchange, automatic exchange issues as well, because it's just not designed very well, the provision, and it can be a bit of a nightmare. So very much in the same way that for UK assets, I would quite often recommend segregating that, having something that we can ring fence for UK assets, so as not to taint all the other international assets, and bring that within the scope of UK tax. Likewise, I would do perhaps something similar where there are Indian assets, Indian businesses as well, just to ring fence those.
Thank you so much, Hilesh. Jay, would you like to add anything to what Hilesh just mentioned regarding the crown dependencies? I think you're mute. You'll have to unmute yourself.
I think I agree with most of the comment made by Hilesh here. A lot of family businesses, they are particularly, looking into structuring in different style, different sort of geographies. The most important thing which comes to when structuring for the Indian clients, it comes to the taxation part. The exchange of information is particularly, creating a lot of issues in, sharing information with HMRC, etc. So I think those points are the key we need to look at. And again, it is quite, subjective. Each and every, person has their own sort of choice or requirement in terms of how they want to structure. Some subsidiary setup, wholly owned subsidiaries, some are looking for step down subsidiaries, or depending on their, whether they want to invest in real estate, or they want to set up a new fintech company, the structure may vary. And I think, again, it is like, one-to-one sort of discussion on case-to-case basis.
Thank you. With that, we're going to move to our next question that we have, and we'll direct this to Prakash. The question is whether we can foresee lower tax in trading in stock exchanges, so money can be invested from an individual investor's perspective, as well as from a startup's perspective, where if it would become attractive and easy to raise funds by good companies. So are there any steps that one can foresee from an individual stock market investor perspective, which would lower his taxes when he invests and trades in the stock market? And from a company's perspective, anything that would make it easier for him to raise funding? Over to you, Prakash, this question, and then we could have Mr. Peer to also share his views on that.
Yeah, one measure that could be done is to reduce the long-term capital gains on the sale of shares to 10%, which is currently 20%. So we can take that one measure, we can expect something in the budget. So that will be making it par with the foreign investors. So that will also benefit companies for the inflow of the funds, and that will also benefit individuals, where we'll be able to generate more funds to the startups. We can reduce the long-term capital gain tax to 10%.
Thank you. Over to you, Mr. Peer. From a company, wanting to raise funding, maybe an SME company wanting to raise funding through an IPO. There are obviously some of the large IPOs which are hitting the market. But from an SME company, any steps that one can foresee that are expected in the budget, which will help good companies raise funding from the market through public markets?
See, for SMEs, they don't have access to that, say, public at large. They can't go through IPAs and all. So for them, next to promoter funding, the only source available is first is funds and relatives, then banks and NBFCs. So they have to go through the banks and NBFCs route, which typically right now is that you need a collateral and all that to get that route. So government has now come up, let's say last year government came up with a scheme of, say, up to 1 crore funding, collateral free funding. But it has not really transformed into practically people getting that kind of a money. The government will have to do something to put that in place so that real deserving these what you call startups, they should get that kind of money, because at initial stage is very difficult for them till they get some kind of angel funding or round A or whatever. At that stage, they need funds, and they don't have a track record. As startup obviously won't have a track record which is the last 5 years, 6 years performance. So government needs to help those people at that stage. Some kind of funding has to be made easier. But these NBFCs and banks, very frankly, don't offer much large hope in the given conditions, because they go by that routine, that legacy systems you provide as the 2x what you call collateral and all, then will be able to do.
So in terms of some of these Nifty Junior or BSE smaller board index listings, you don't, from a CFO's perspective, don't think that those are attractive for an SME to get listed on these junior indexes, Nifty Junior and other, which have come into place?
See, SME may not even a greenfield SME. At a greenfield stage, obviously, will not have cannot have a recourse to those kind of funds. It will be maybe it's a what you call a brownfield and all. I'm talking at the initial stage investment. So it has to come up to a certain size where it needs real help, some mentoring to come up to that stage where it can go from the Series A funding or next round of funding. But for the initial stage, that funding has to come from banks, FIs, and that government only has to incentivize that through some, they have to do some concession, that collateral free loans and all have to be given, maybe some other kind of security and all. So that some kind of support is needed at that level.
Okay, thank you. So I have one question in case there are no other questions over here. And the question is to you, Mohan sir, in terms of COVID cess, one of the big things that is being talked about to balance the government's budget, obviously the deficit, as we talked about, is going to enhance, but some, measures in terms of a COVID cess on the super rich, earning above a certain threshold, say 5 million or above, is being talked about. How realistic is that, and how do you think it's going to go down with the public if a COVID cess is introduced? We already have a cess for education, we have a cess for healthcare. Now, do you think a cess for COVID is going to be something that the government is going to be looking at? Over to you, Mr. Mohan.
I think in case they introduce any on even super rich or things, we are already paying the surcharge in this. This COVID tax, I think it will negatively impact. So I think government may not take up that. I mean, this is my view, but instead they should make money more available to general public, enhance the basic threshold. And Mr. Prakash said it should capital should be reduced to 10. I feel long-term capital should become 0, at least on shares. So,
let's keep our fingers crossed, and on that happy note, thank all the participants and panelists, for a great job. I'm going to have a round of applause to everybody, and thanks. Mr. Peer, Prakash, Jay, Mohan sir, Hilesh and Samiksha for all the help that you put behind, and of course Mr. UN Marwah for your guidance and vision. Thank you.
Thanks. Thank you everyone.
Thank you.
Thank you.
Thank you everybody, and thank you for participating, attendance. You've all been great participants. Thank you Kalpana for your wishes. Thank you.
Thank you everyone.
Thank you everyone.